All right. Hi, everyone. Hope everyone's doing fantastic on this day. Thanks for joining. And today I am joined with my friend Tim. I'll let him pronounce his last name just in case. And so, Tim, if you want to just give us a little, background on who you are and what you do.
Sure, yeah. So my name is Tim Plonsky. I'm a certified financial planner and founder of River Wealth Management. River Wealth Management is a registered investment advisory practice. We're located in Westlake, Ohio. I've been in practice for about 12 years now, and work with clients all over the country.
Okay.
Especially here locally, have a nice presence. I was born and raised in Cleveland, so have a nice natural network here in the area.
Great. Okay, great. Yeah. And for those maybe who are outside of Cleveland, we are in Cleveland. That's where we're from. But it sounds like Tim maybe can work with folks in other places. I also can. For those maybe who don't know me, I'm Rachel, and I'm a financial wellness coach, and my business is Effortless Budgeting. And we'll come back around at the end and give everyone some more information on how you can contact both Tim and myself. So today, I think we're gonna talk about something I think that's on a lot of people's minds with looking at the market and panicking about what our investments are doing, maybe pulling out all of a sudden because we're worried about things not going as smoothly as maybe we've been used to them going. And so Tim, as a financial advisor, has a lot of information as to, like, should you be panicking right now? What should you do with your investments that you currently have? So Tim, I don't know if you want to start maybe giving people like a little bit of peace of mind, because I know there's been so much volatility lately with what things are doing and people are panicking about losing money, and anything you can just say that might help ease people's minds that do have money in the market.
Yeah, I mean, obviously it's been a very challenging year, and these are definitely turbulent times in the market. I mean, I guess a quick recap of how we got to this point. So inflation is the highest it's been in over 40 years.
Yeah.
And that, is putting a ton of financial strain on households here domestically. On top of that, we have geopolitical events like China's zero COVID policies and Russia's war on Ukraine, which are adding to those inflationary pressures. And as a result, the Fed has been aggressively raising interest rates to try and combat inflation and bring it back to their long-term target of 2%. So in effect, by raising interest rates, they're increasing the cost of accessing capital for both businesses and individuals, and in doing so, attempting to slow the economy. So I guess the most important thing I can say as it relates to investing, especially in turbulent times like this, is, I guess, just stressing the importance of keeping that long-term perspective and staying the course through good times and through bad.
Mm-hmm.
Most people I come across refer to themselves as a long-term investor until they have short-term losses. And then things like fear and emotion and panic set in, and it clouds their judgment.
Yeah. No, could you say, is what we're going through now normal? Like, is this something that we've been through before and maybe we've just forgotten, or is this like we've never seen this before?
Yeah, so that's the unique thing about finance. It's kind of both, right? There's always some risk out there. There's always some noise that's the media is beating the drum about, whether it's inflation or politics or geopolitical events. There's always some risk out there, which people speculate is going to be the cause of the next financial calamity. But to your point, we've been through all of this before, and while every market circumstance currently is unique in some way, we can use history and reflect back on the various events that we have lived through and use that as a guide to manage through the current events.
Yeah. Now, if you have no money in the market and you've not invested, is now a good time to start doing that because of, sort of how things are right now?
Absolutely, yes. Absolutely, yes. So, a lot of people, again, when they're faced with stock market turmoil, things like fear and emotion set in, and they want to panic and sell out of everything and kind of run for the hills. I challenge my clients and anyone viewing this to reverse that mentality and view stock market turmoil like this actually as a buying opportunity. Warren Buffett said it best: you want to be greedy when others are fearful and fearful when others are greedy. So
Mhm.
for perspective, there's a ton of great companies out there with strong balance sheets, excellent long-term growth potential, phenomenal management teams, and so forth, that because of the current conditions may be 30, 40, 50%, sometimes even more, off their highs for the year. So it's a great time to, especially for new investors, with money on the sidelines, to begin
Mhm.
contributing and investing for their future.
Yeah. So let's say, I'm a 25-year-old, which obviously I look that age, right? I'm a 25-year-old who has never, I'm just getting started. Like I just kind of got my first good, decent job. And so what it sounds like what you're saying is now would be a great time to contact you or, a financial advisor that you feel comfortable with and get some of your money into the market to start now, because now is a good time to get started.
Absolutely,
Okay.
yes. I mean, relying on the expertise and the guidance of a financial advisor, I think,
Mhm.
makes all the difference long
Oh yeah,
term.
I
And it's
agree.
not so much with returns in the market. I want to stress that, returns kind of come and go. And quite frankly, there's nobody out there that is going to beat the market every year.
Yeah.
In fact, if somebody had that part of it figured out, they'd be retired on a beach
Yes.
somewhere, because they would have had the game figured out. But
Yeah.
the most important thing is to focus on what you can control. So,
Hmm.
living within your means, paying down debt, finding ways to save more. And especially starting out, it's important not to overcomplicate things.
Yeah.
For a young investor in their, early mid-20s like that, something as simple as an S&P 500 index fund, it's very, very low cost. It gives them broad diversification to the entire market, and has a proven track record over time of being a great long-term investment.
Okay. So now to play devil's advocate, and I'm a 60-year-old who is hoping to retire in the next 7 years. What should I do with my investments that are currently in the market?
So somebody that age is kind of transitioning from what I call the accumulation phase, where they're saving and trying to grow their investments, to now the distribution phase, where they're transitioning from trying to grow their investments to now relying on their portfolio to generate income. So those two people, the 25-year-old and the 60-year-old, are in vastly different points in their
Mhm.
lives,
Mhm.
and as a result, can I guess vastly different risk situation. So, someone who is looking to retire in the next few years, it is incredibly important to have a plan, have all of those intricate details kind of thought through in advance, so that when times like this, times of market turmoil or stress happen, you're prepared and can act accordingly.
Yeah. So it sounds like regardless of where you are in your career or your life, you probably should reach out to your financial advisor or find one and get some advice, right? Get some direct advice. There's a lot going on, and I know like a lot of it is not my expertise either. So, a financial advisor is so helpful. And mine has been very helpful for me. And you mentioned something earlier, which is like my cup of tea, is like making sure that you are living within your means and that you are paying off your debt. And for somebody like myself, and I'm sure you would agree, if you have debt, that doesn't mean you should have no investments, right? You should do both. You should be paying off your debt, but also saving for your future. And I know sometimes that can be challenging to kind of figure that out, but somebody like myself, and then also a financial advisor like Tim, could help folks kind of figure out what that looks like. Because a lot of people are just like, I want to pay off my debt. I just want to pay it off. And then they have no money in their savings. They have no money in their investments, and that can be dangerous too. I mean, you want to have, stuff for emergencies, and you also want to have stuff in the market so that it can grow over time. So I'm assuming you probably agree with that as well, right? Like, don't necessarily just focus on one thing, just making sure your whole financial picture is taken care of.
Absolutely, yes. Yeah, I mean, everybody's situation is unique, and that's one of the things that makes financial advising fun to me, is that every person I meet with is a unique challenge and opportunity. But yes, I mean, generally speaking, leverage can be a good thing. Think of it from the perspective of buying a home. Not too many people out there have the liquid funds available to just go out and pay several $100,000 in cash to buy a new home.
Mhm.
So, through debt and leverage, a mortgage in this case, you're able to acquire an asset that you're going to live in and, should appreciate over time. So the line in the sand, so to speak, that I use with debt is about 6%. So generally speaking, if the interest rate on your debt is higher than what you can reasonably expect to return in the market, then you're better off paying down the debt aggressively. Or excuse me, if the interest rate is higher than what you can reasonably expect to return, you're better off paying down the debt, because you'll save yourself more in interest
Right.
than you'll earn by investing your money. Again, the line in the sand I use is about 6%. So things like mortgages, student loans, auto loans, for the most part, tend to fall below that threshold.
Right.
So with those sorts of things, overpaying on debt is always a good thing. But, from a financial perspective, making the minimum payment and then investing whatever's left over is likely to generate higher returns and better growth long term.
Yeah. I just had a thought and it's gone. I guess now's a good time to end, but man, I had something good. Well, Tim, we could definitely talk about this for much longer, but want to give people back some time. So thanks so much for joining us. This was super helpful. I just want to, the other thing, actually, this is what I was going to say, is the other thing with like investing. I just posted something on my social media this morning about like when you learn or you think of some type of habit or something you could be doing, the longer you wait to do that, the less likely you're ever going to do it. And the faster you act on it, the more likely it's going to become a regular habit. So if you're seeing this and you're like, gosh, I've been thinking about calling a financial advisor and, just seeing where I could be, and maybe I only have $200, I don't know. I've just been thinking about it. Don't put it off. Like, do it now, make that phone call, because the sooner you do it and the sooner you reach out for help or just advice or whatever, the more likely you're going to be successful and be able to make that a regular habit. So, okay. So if you just want to give us a quick, like, how can we find you if somebody wants to reach out to you to work with you? Where can we find you?
Yeah. So again, my firm is called River Wealth Management. Our website is www.riverwm, again, as in wealthmanagement.com. If you visit our website, on the page there is a contact us form. You can fill that out with your basic contact information and message the team here, and we'll follow up with you. Or as always, people can feel free to call me directly. My office line is 440-385-7244.
Okay. And if someone's outside of Ohio, they're still able to work with you or your firm?
Yeah. So all of my licenses are federal. So yeah, I can work with anybody in the continental United States.
Okay, fantastic. Thanks so much, Tim. And again, my name is Rachel Dorsey. I am a financial wellness coach. My business is Effortless Budgeting. I also can work with people all over the United States. And you can find me, my website is effortlessbudgeting.com. I am on Instagram and Facebook under Effortless Budgeting. And then I also post on my LinkedIn page, which is just my name. So feel free to follow or comment or whatever on my social medias. And then of course, if you're watching this on my YouTube channel, you already know, but for those that aren't, also have a YouTube channel under Effortless Budgeting. Okay, well, thanks so much, Tim. I really appreciate your time. And I imagine there may be another time in the future that we're following back up on some of these topics.
Yeah, thanks, Rachel, for having me. I was, excited for the opportunity and would welcome the chance to come back anytime.
Sounds great. All right. Bye, everyone.